Welcome to Access a Trader, the #1 community for high-level traders to learn valuable trends and strategies, connect with other top traders, and become consistently profitable. Click the link in the description of this video to receive a special offer on our revolutionary PS60 training, access to our daily interactive webinar filled with experienced traders, and so much more. Space is limited, so make sure you don't miss out.
Hey guys, good morning everybody. Welcome to another edition of the AccessTrader.com weekend update show. Hope everybody is having a great weekend. I personally look forward to the weekends. Trading takes so much out of me. I mean, mentally takes out so much out of me, and it doesn't make a difference how good of a week I'm having once like Friday comes along, especially if you guys who are just joining us via Twitter or StockTwits or the YouTube channel. I speak 7 hours a day, 7 hours a day, 5 days a week. If that's not enough, well, I trade for a living, right? I actually trade for a living. And, us as traders, we put so much emphasis in every single one of these trades. As much money as we put in the middle of the table, and that money is risk, we put 3 times more mental capital. So once our mental capital is on the table, that burns, and that burns very, very rapidly. So whether you win, lose, or draw for the week, you're so burnt out by Thursday night, Friday morning. You really need a good mental kind of recharge, just put yourself in a situation that you decompress and you kind of enjoy life. Because again, as much as the theory of I love trading, especially for new traders that are first, getting their feet wet in this business, over the years, it takes so much out of you. So it's so important just kind of being a good friend to yourself. Just decompress on the weekends. Of course, do your homework. Of course, do your prep work, your legwork for the next, trading week. But it's so important just to kind of mentally just take a step back, enjoy life, live your life, love your loved ones, just smile, do whatever it takes to get you back to center so you could focus on the next week. Just a quick announcement. I want to thank everybody who came aboard on our live PS60 feed over the last week. We had a pretty good response, in the first week. For all you guys who don't know, watching this for the first time, I've been tweeting out the live pivots on our Twitter account for 4 years. A really, really good sample size, more of a sample size, but a body of work of what these pivots could do live. And again, these are not small cap, low float stocks. These are beta. These are Teslas, your Googles, your Amazons, your Netflix, Nvidias, and Alibabas, and everything, Apples, and Facebooks, and Rokus, and everything in between. These are the most aggressive stocks on the market, and we've been doing this, live for about 4 years. And again, we made a business decision. At the end of the day, this is a business. We made a business decision about a week and a half, 2 weeks ago, to make this into a private Twitter feed. Okay, it has nothing to do with the live webinar. The live webinar shows you step by step every single day, me talking, screen sharing, showing my trades, everything in between, how the PS60 theory works, why these pivots, the nuances, the moving parts of these pivots, why they work. The PS60 live feed on our separate Twitter account is just the pivots that are about to build. Now, again, a pivot is not a trigger. It's not an alert, guys. Okay, don't think for a second it's an alert. An alert is a brainless vehicle that social media put on a lot of new traders, a lot of new social media traders to, I'm going to give you the alert, and when this stock triggers, it's going to go, oh yeah, if I had 500 people buying a $2 stock with a 2 million share float, of course every single stock's going to go. That's an alert. When you're trading risk capital, your Teslas, your Googles, and Amazons in the world, you're relying on technical analysis, you're relying on the arbitrage that we found, and the most important part is once it's built, and again, a pivot is not an alert, it's a high probability, okay? It's an incredibly high probability point of interest that a directional bias change is about to take place. Now, once you see the distribution or the quote unquote build over that level, it's a very, very high probability that a measured move, and again, if you believe in the theory that stocks trade from supply to supply and demand to demand, it should get there. So pretty good response in the first week to our live Twitter feed. For all you guys who enjoyed the live feed for the first prior 4 years, again, we made our introductory offer. The live room has nothing to do with the PS60 live feed. It's only $20 a month. It's only $20 a month if you work for a living. They can't be in the live webinar. And again, it's only a very small portion of our plays because, again, we do trade a lot of mid-cap stocks, I wouldn't say a lot of small-cap stocks, but very specialized plays, beta all over the place, obviously. I try to regulate the private feed to the most liquid, high-volume stocks, mostly high beta. So if you do trade high beta and you can't make it to the live webinar, it's only $20 a month. It's a lot of value. It's a lot of value, as you saw throughout the week, especially on Friday, with that really aggressive pivot on Amazon that only went down 11 points, which I caught. So for you guys who want to join us there, it's a really good value. So let's talk about the market. Okay, let's talk about the market. The indexes were down this week. Okay, does anybody care? I don't care, right? Nobody should care. If you're a professional trader, you are not relying anymore on the scoreboard. You're not a slave to the indexes. You don't care about the performance of what the Dow did compared to the S&P 500, compared to the QQQs. The scoreboard read that the NASDAQ 100 and the S&P and the Dow Jones Industrial Average are all down for the week. It doesn't make a difference. Again, the stock market, as we know it, is dead. It's dead. It's been dead for a long time. It's a specialized world, right? It's a specialized world. The word doctor doesn't mean you do everything in the world of medicine. You could be an oncologist, right? You could be a surgeon. You could be, you could treat people's dirty feet, right? Doesn't mean you are a blanket doctor. You have a very specialty. That's what we do as traders. The new millennial trader especially has to have a specialized vice that they could grab an edge to this market. So whether the market goes up, down, or sideways, it's not going to make a difference, or it shouldn't make a difference as long as your process is specifically highlighted. And that's when you can press the foot on the pedal and get and really start squeezing the market for all it has. And what we saw this week was something called distribution. It's one of the ugliest words that you can have in a trader's vocabulary. And for all you guys who are using this platform for the first time and seeing it for the first time, obviously there's something called a bullish cycle. There's obviously something called a bearish cycle, and there's something called the distribution channel. The distribution happens usually off top of channels or off bottom of channels, and some people call it a rounding top, some people call it a rounding bottom. I call it distribution. And what distribution basically is when the bull doesn't have enough juice or confirmation or any incentive to go higher, and the bear has no fear, right? Has absolutely no fear or no materialistic basis or facts or news to take the market lower. And I use this example all the time. It's like being stuck in a phone booth with somebody, right? And getting into a fight with a phone booth. If you can imagine, you're in a phone booth. It's very tight. So nobody's doing any damage. But what's happening is a lot of traders, and we talked about this in the beginning of this video, a lot of mental traders get caught and they burn so much mental equity because the stocks that want to go higher, they can't go higher. The stocks that should be going lower, they can't go lower because there's not enough fear in the market. So we saw for about 4 days, and we had 4 straight days of downward bias and on the QQQs, NASDAQ 100, S&P 500 as well, and all 3 of the indexes ended lower for the week. But more important, I found that I saw a lot of traders really burning a lot of mental equity, and I can see distribution right away. You can see it clearly right away in the first hour of the day. Once you see, and again, this is an example here of the most aggressive stocks that I trade every single week. And when you see Tesla gave a couple of pivots on Friday, but nothing big, nothing big. When you see overall very sideways action on Tesla and Amazon, obviously this was a really, really good trade on Friday. But when you see really sideways action on Alibaba, sideways action on Nvidia, sideways action on Netflix and everything else in between, it really does prove the point that, again, distribution is occurring. So distribution usually lasts about 4 or 5 days. I think by Monday, we should have much more clarity, at least the latest by Tuesday, and the ranges should expand. So what I do as far as, because I trade ranges, okay? I trade ranges. When the ranges expand, it's the most wonderful thing, because that's when you get your Netflix that could have a $4 candle, Tesla could go up 10, Google could go up 10, Amazon could go up 20, Nvidia, blah, 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 blah. When they contract, it gets very, very frustrating, especially to the new trader. And again, I use the word new trader for somebody who's been trading less than 3 years, because they haven't seen all the moving parts. They haven't seen the bear market. They haven't seen the bull market. All they've seen is the bull market. So they haven't seen a lot of distribution, so they can't mentally adjust from bullish to distribution because they don't know the difference. And the problem is, and I saw a lot of people use the word chop, chop, chop. Well, yeah, you can use the word chop, but that's not exactly what's happening. Distribution is the ranges are contracting, and they're almost waiting for the next signal in the market. Now, again, is the next signal in the market going to be the upside? Again, you have to give the bulls the benefit of the doubt, because again, for the last, let's just say for the last 14, 15 months or so, since the rabid bull market has started, even with the slightest back test, the market kind of found its way up and starts taking out the high, the 52 all-time highs again. So you have to give the bulls at least the benefit of the doubt until there's a buyer strike. Now, again, is the distribution the first inning of a buyer strike? Well, again, it's to be determined. We don't know what's happening next until we get confirmation. And confirmations are usually daily charts that are confirming the price action. So for example, if you see the NASDAQ 100 kind of dwindling, and you look at the 60-minute channel, and this whole channel, the bottom of this base here, is this roughly this 171 area. You can see it. Again, the biggest technical analysis that you can have, or the biggest bias of technical analysis you can have, and the most important are your eyeballs, right? It's your eyeball test. So you can see you have 4 days in a row of the NASDAQ 100 testing that bottom channel of the 60-minute moving average. So you have 171, 171, 171, 171, 171, 171. So until the market confirms that 171 and we start cracking lower and start going lower in the NASDAQ 100, you have to give the benefit of the doubt to the bulls. So going into this week, yeah, I mean, look, is it going to be important for the bulls to hold that 171 line on the NASDAQ 100 that's been holding for the last 4 or 5 sessions? Absolutely. Is it the end of the world if it cracks? No, it's not, because again, at the end of the day, if you believe the stock market, again, and this is my whole belief of the whole PS60 theory, if stocks trade from supply to supply to supply to supply, well, if it goes from demand to demand, you're talking about only $1 and change on the NASDAQ 100. So is it the end of the world? No, it's not. And the bull market, again, is alive and kicking. What the problem the problem that could arise is that we can have a situation that if the futures start moving higher and you're not getting participation from the leaders, from the semiconductors had a really, really big run, from the Amazons of the world, your Netflixes of the world that had very, very big runs, your Nvidias of the world, your Alibabas. If there is a buyer strike as the futures are starting to rise, that's when you're going to start collecting more data. Then wait a minute, maybe something is more off with the tape than a simple distribution, than a simple back test into rising support. But again, before we put the cart in front of the horse, we need more data, right? We need more data. Trading is all about collecting data. Again, I don't care what type of trader you are. You could trade options, you could trade bonds, you could trade futures, E-minis, equities, cryptocurrencies, whatever your heart desires. Whatever type of trader you are, you're basing your synopsis, you're basing your opinion of what's about to happen of all the data that you can collect. And the most important part is screen time. If you're not sitting there and you're not watching the action, you're not watching the order flow, well, how can you possibly put a valid opinion and put something to work if you're collecting no data? And it's very, very important. So going into this week, yeah, I mean, look, the bulls need to hold a 10-day, right? The bulls need to hold a 10-day moving average. It's already building below the 5-day. Again, if you're in the camp like I am, especially a lot of our old school heads, and again, I'm going to be celebrating my 19th. It's amazing to say. I will be celebrating my 19th year anniversary as a trader in May. Okay, I'm 43 years old, and almost half my life I've been clicking this damn mouse, which is remarkable to even think about. But if you are like me and you believe that, well, the 5-day sentiment is very, very important, well, we've closed now 3 days in a row below the 5-day sentiment. Now, if we start confirming the 10-day, then yes, something more than a back test and distribution that we've been seeing with these contracting ranges are going to expand. And they're not going to expand to the upside, they're going to expand to the downside. And if you believe in the theory that stocks take the stairs up and the elevator down, if you're a guy like me, you're looking forward to some of these pivots to the downside. So again, going into this week, you have to give the bulls benefit of the doubt. But again, we're going to be looking for early signs of any type of buyer strike. And if the market can't go up on good news, if the market can't go up on the futures, then again, it's the old theory. Whatever doesn't go up must go, right? So that's that. I thought this week was very, considering the distribution. The previous week, I was incredibly active. I was averaging about, I would say, 7 to 10 trades a day. The previous week was a very, very aggressive week. This week, once the distribution started, I was averaging about 3 to 4 trades, about 3 to 4 trades a day. And again, I say this all the time. It's not a competition, right? It's not a sport of bravado. It's not how many trades you put on, it's how many trades you put on effectively and how many trades you put on properly. So with this distribution, it was a lot of effort to sit on your hands patiently. And one thing in trading, the one thing you can't sell, right? You can sell a soft drink, you can sell a sweatshirt, you can sell a watch, you can sell shoes and sneakers and bikes and televisions. The one thing you can't sell, and if anybody ever figured out how to sell it, is patience. You can't put patience in a bottle. You can't put patience in a box and said, here's what patience is. If you take it and love it and embrace it, you will be successful. But unfortunately, patience is a priceless commodity. Okay, it really is. For those traders who jump out of their shoes at 9:30 every single day, the word patience, you might as well be saying you're going to visit Mars. Patience is a prime commodity. It's incredibly priceless. If you're a patient trader, right, quote unquote patient trader, and you wait for the trades to come to you, you will thrive. Long-term longevity, you will thrive. If you are a trader that 9:31, there's nothing going on by 9:31, you call it a day, well, there's a problem, okay? You're trading because the market's open. You're not trading because you're getting value. And for me, it's all about value. For me, it's trading what the market's giving me, whether I take 1 trade a day, whether I take 10 trades a day. It's all about how much risk reward can I get, how much value is presenting, and where is my risk defined element. If I can't identify all 3, there is no trade. Again, this is not a business of poking out your chest, pounding your chest like a caveman, and saying, I'm better than you, I'm bigger than you, I'm smarter than you, I'm richer than you. It's a very humbling business. If you don't bring your A game every single day and identify, engage risk every single day, you die. Very simple. You die. There is no such thing as being a little bit pregnant. You're either pregnant or you're not pregnant. You will die. If you don't trade this market the proper way, if you can't see the difference between bullish sentiment, bearish sentiment, distribution, and keep on driving the car the same speed, the same way, you will crash. So it's very, very important. So I thought this week was solid. And it wasn't solid because it was 1,000 trades a day. It was solid because we were able to identify the most aggressive pivots and we were able to take them. So for example, Friday was quad expiration, right? Quad expiration on Friday, everything was expiring. I knew this was going to be a slow day. Because if you didn't catch the volume or whatever you were looking at the open, all the volume came out at the open. 90% of the day came out the open, and then everything went sideways, right? Everything went sideways. And I sat there and I said, well, look, if I don't put on a trade today, I'll be fine. It was, this very solid week. I'm okay with that. I'll wait till Monday. And I had a game plan. Going into the day. I really loved Netflix to the upside, which didn't confirm. And I really loved Amazon to the downside. And a lot of people turn around and say, well, why would you possibly love Amazon to the downside? And I was watching the bottom channel for the whole week. We had Amazon off our watch list for the whole week, because it kept on testing. It kept on testing this, excuse me, it kept on testing the bottom channel here, the whole week here. You can see this right here. It kept on testing this bottom channel, 1578, 1578, 1578. Okay, it kept on going, right? 1578, 1578. So it broke that 1578 level. I got short the stock, and the stock got killed. I mean, the stock got absolutely killed. And it's almost like you had to warn. People are so emotional about trading. For me, I'm not a bull, I'm not a bear, and I'm an opportunist. I'll trade these things equally, whether it's to the long side, to the short side. Yes, I think Amazon will be a 2000 one day. So I almost had to, pull the perma bull off the ledge on Friday when I tweeted out and said, hey, well, here's what's happening. If Amazon takes out the lower level, you could see a 10, 12 point move because, again, if you believe in the theory, stocks go from supply to supply and demand to demand. Well, it hit demand. So if you can see here, this is one of the opportunities that I really loved on Friday. And this is one of the opportunities that I only put on one trade. I personally myself, I only put on one trade. I shorted Amazon going green to red. And once it confirmed the 1578 level, the stock really did very, very well. My last runner, I took 11 points out of Amazon. Considering how range bound this market was actually a very good trade. The only other thing I had ARQL overnight. This is something we bought on Thursday. We bought on Thursday on this $2 break. I only had a third left. So I sold the move. Big move. Big move. Again, I don't trade a lot of these small caps anymore. But when I see a chart that I do like, and I see a bunch of good distribution above that level, okay, and it doesn't go down. Again, it's the same theory as whatever doesn't go down must go up, and whatever doesn't go up must go down. So I traded this thing. We had this thing, nice 10, 15% move overnight on this thing. So it was a good trade. So overall, I was pretty happy. With the week. I would have loved to have a bigger, more momentum shift, but again, distribution is distribution. So going into this week, I do believe we will have one more day, possibly one more day of distribution, and then I think everything will finally play out in its, entirely in its organic nature. And by the way, all these pivots on beta, I do put ahead of time in the live PS60 feed on the private Twitter account, so you guys can pick and choose whatever pivots you guys want to trade. And I really appreciate the feedback. I'm very, very happy you guys are getting value, and more important is we will continue to give you the highest value plays for the day. So let's get into tomorrow, right? Let's get into tomorrow's session. Again, for all you guys who want to join us either in the live webinar, I really highly recommend it. Again, if you want to build a big foundation, I've been doing this for a very, very long time. There is no smoke and mirrors. There is no trick photography. It's all about live ability to read the markets and execute with proper feasibility. So if you want to join us in the live webinar, that's great. If you work and you want to join us via the live PS60 feed, it's only that is only $20 a month. It is a home run value steal. It's a great way to, again, to understand how these pivots actually work. But if you want to break down the pivots, best to join us in the live webinar. So let's get into it, right? Let's get into what we like for Monday's session. And for the rest of you guys who are joining us via social media, I will see you on the field come Monday. For the rest of you guys, this is what we're looking at. Here's what we're looking at for Monday's session. So let's start out with Boeing.